Welcome back, everybody, for my portfolio update for June 2024. And the exciting part for me is that the changes I made earlier in the year are actually starting to pay off a little bit, and the activity on my account has been slowing down, which, contrary to popular belief, was actually the plan all along. And now the S&P 500 in June was up almost 3% and now around 14.5% year to date. But again, it was a month where I saw some big winners in my portfolio and others not so much. So where did I actually end up for the month? Let's find out. As of July 1st, my account is currently at $291,190.35. And in the last 1 month, my portfolio balance is up over $11,000. But I think that includes an extra day or two in May, so it should be slightly lower as we take a look at the actual breakdown. So if we adjust this to see how we did for June only, we see that my beginning value was $280,091 and some change. I made $800 in net contributions for the month. Now, in terms of my overall investment change, it was $10,074.89, which was mostly investment gains of $9,607, as well as $466.95 in dividends and account interest. So again, adding $10,000 to my portfolio in any given month is a pretty solid month, but let's take a look at how I did against the S&P 500. And just real quickly, one obvious change that I made was my portfolio name forever was originally called Dividend Growth, which really was misleading, so I finally changed it to simply Matt Stocks because obviously that will always be true no matter what. But as you can see for the month, the S&P 500 was up 3.59%, accounting for the timing of my own contributions, and my portfolio was up amazingly the exact same amount of 3.59%. So we matched the S&P 500 for the month, which as you can see by the chart, I actually thought we were going to outperform it, but then the last day of the month, the last 2 days, really did me in. Now, if we take a quick look at the year-to-date performance for 2024, the S&P 500 is up 15.29%, and my portfolio was up 12.33%. So we're trailing just under 3 percentage points of the index for the year. Now, just for consistency, let's take a look at the performance of my portfolio since I started it on December 8th, 2022. And if we remove the annualized returns, we see that in terms of total return, my portfolio was up 31.34% compared to the S&P 500's 42.26%. So since I started this portfolio, I'm trailing the S&P 500 index by about 11 percentage points in total return. And just going back to June, it's nice to know that we kept up with the index for this month, had some pretty solid gains, and especially when you consider the fact that the activity in my account has gone down a lot, which we're going to see in a minute. Now, if we take a look at my investment income, specifically for the next 12 months, and Schwab changed this view over the past month or so, which honestly, I'm not really sure how much I like this new look, because if we look at the old view, it looked like this, which I actually think looks better. This new view kind of has too much contrast or whatever, but anyway, we're going to roll with the new one and see how it goes. We see that my annual dividends and interest are at $2,658.63, which compared to the $2,627.49 that I had last month, which is a $31 increase, and that's obviously small, but it's nice because it's the first month in the last 4 months that number's actually gone up. And that's because of all the changes I've been making in 2024. So this is a nice change of pace to see it going back up, even if it's just a little bit. Now, in terms of overall dividend yield for my portfolio, it dipped a bit to 0.91%, even though my dividend income went up slightly, and that's because the value of my portfolio rose at a faster rate than my dividends did. So my yield is still going lower. Now, for me, that's no issue, and really, in my opinion, it's a good problem to have. But let's take a look at the dividends that actually hit my account for the month. On June 3rd, I received $63.44 from Visa in 3 different accounts. On June 17th, I received $21 from Google in their first ever distribution in 2 different accounts. And also on June 17th, I received $208.75 from McDonald's in 3 different accounts. On June 26th, I received $9 from Meta in 2 different accounts. On June 28th, I received $160.50 from Valero in 3 different accounts. And then lastly, also on June 28th, I received $4 from NVIDIA in 3 different accounts. Those NVIDIA dividends are really pushing up my portfolio. They're amazing. But that gave me a total of $466.69 in dividend income for the month. Okay, now let's take a look at what I bought and sold for the month, and I guarantee you this is going to be quick. On June 18th, I bought 7.4195 shares of Amazon at $183.01 a share. And that's it. That's all the buy and sell activity that I had for the full month. And if we go back to last month, it's actually the only buy or sell that I've had since May 9th. So I've been telling you guys that the changes that I made so far in 2024 were really strategic and long-term in nature, and that the activity on my account was going to slow down, and finally, we're seeing that. Now, one thing I wanted to point out that you might be wondering about is what's up with this 0.4195 shares on my Amazon buy? Well, I decided to try out the Schwab Slices functionality where you can buy fractional shares, and I hadn't actually used it before on Schwab's site, but it worked fine. Now, theirs is a little bit more limited in that you can only choose stocks in the S&P 500, but since I have 5 different account types and I reinvest my dividends manually, this really helped because I end up having small amounts of cash in multiple accounts, so it's hard when I want to focus on one particular company to add to when I don't have enough to buy a single share. So this allowed me to pool the money and basically focus on one company to add a position to. Now, I'm not sure if I'm going to continue doing this every time, but at least for this particular time, it worked well and something that I may use again. Now let's talk about Amazon real quick because it's a stock that I've continued to add to after my initial buy in January, even though the stock has continued to run up. And I've talked about this multiple times, but when people talk about Amazon right now, I feel like here's what they really see. And that's basically the price chart. And they go back and they look at 2022 and they say, oh, it must be overvalued now because it's gone up from $90 to over $190. And it's at an all-time high. It's priced to perfection, whatever that term means, because to me, it doesn't really mean anything. Now, I told you guys I've been looking at historical value metrics and primarily price to operational cash flow. And if you look at Amazon, it's trading at a price to operational cash flow that is close to the lowest in a decade. Now, to be fair, operational cash flow doesn't account for things like stock-based compensation or CapEx spend, which we know for Amazon, both of those have gone up a lot. But again, I told you I'm not doing detailed price targets anymore. I'm simply doing these things when I evaluate a stock. I'm evaluating their core business and their future outlook. I'm evaluating how I think their business is being ran operationally. And then I'm evaluating their relative price to value with cash flows in relation to their growth rate. And this last part is something that I haven't talked about a lot, but I will in a video next week because I've been experimenting with a price to cash flow to growth ratio so I can see the relation a little bit quicker. It's similar to the PEG ratio, but with cash flows. But my goal isn't to get a specific price target, it's just to get a general idea of where it's trading based on its price to value to growth metric. And it's a really simple number that I can update for companies that I've already analyzed and understand well. So it gives me just a quick visual on where they're trading relative to their growth rate on that day. So more to come on that next week, but the bottom line is, regardless of Amazon going from $90 to $190, the business growth is outpacing the stock price growth. And to me, it still looks attractive, which is why I've continued to buy. And I know it sounds cliche, but what you pay is price and what you get is value. And when I look at Amazon's fundamentals and I look at their outlook and their growth rate, to me, it still looks attractive. So with that in mind, let's take a look at my updated portfolio allocation and weightings. Now, usually I show this view on the Schwab site, but the way they have it laid out is just god awful. Like it's just too far apart and I can't change the view. So I'm going to use this finchat.io graph that I've been playing around with. And the numbers are slightly off because they kind of round up a little weird, but it's a much nicer visual. So let me know if you actually like this view or the old view better in the comments. All right, let's take a look. Now, NVIDIA continues to grow its weight in my portfolio and is still first at around 17%. Amazon is now second at 13%. And if you remember, a few months back, I said that NVIDIA and Amazon are my 2 highest conviction holdings. And since that time, I've basically made up my 2 largest holdings. Now, part of it is because I've added to those positions, and the other part of it is that they continue to go up. But in general, my highest conviction holdings are my largest holdings, and to me, that's how it should be. Now, Apple is back up to third at 11.3%. Visa is next at 11%. McDonald's also around 11%. And just those 5 companies right there make up 63% of my portfolio. And one thing that I noticed this past week is that Kantar published their top 10 list of most valuable global brands for 2024. And what I saw was 7 of the 10 brands on their list were actually stocks in my portfolio. And more specifically, each one of my top 5 holdings is on that list. So what does that mean? I mean, I don't really know, other than I'm attracted to high quality, valuable brands when it comes to picking stocks. Now, whether that means I'm going to outperform or not, only time will tell. Okay, back to the list. Valero is around 8.1%, Amex is at 8%, Google is about 6.6%, Caterpillar now at 4.5%, MSCI is at 3.5%, Meta is at 3.1%, and then lastly, Lulu is also at 3.1%. And now if we take a look at what holdings have performed the best overall, and remember, this is just price return since I take my dividends in cash to reinvest manually, Amex has held on to its top spot even with a down month at 52% gain. Nvidia has shot up to number 2 at over 43%, and actually it was holding the number 1 spot earlier in the month before it came back down, which is crazy since it's only been in my portfolio for about 90 days. Next is Caterpillar at just under 35%. Valero is over 33%. Google continues to do well and is up over 27%. Amazon is at over 19%. Apple has had a really nice run over the last couple months and is now solidly in the green at almost 13%. Meta has continued to do well and is now up over 12% in less than 2 months since I added it. Visa is one that has really struggled this year and has come down to being up just over 7%. And now for my 3 negative holdings, which are the same as last month, McDonald's continues to struggle and is now down over 5%. Next is MSCI, down over 10%. And lastly, Lululemon is sitting at a negative 16.5%. Now, if we take a look at the last month, you can see that as of June 30th, in terms of my positions that outpaced the market, you had Apple with another great month at almost 11%, Nvidia again doing well, up almost 8.5%, Amazon was up over 6%, Meta up over 5%, and Google up over 3%. So again, all those quote overpriced tech stocks that I added to my portfolio this year, except for Apple that was last year, have really driven the gains in the market and in my portfolio. And to me, they're the strongest companies in the market, and that's why I added them. And at least for now, the market agrees. Now, in terms of the holdings that lagged the market in June, Lulu was up over 1%, McDonald's was actually up about 0.5%, Amex was down over 2%, MSCI down almost 3%, Visa down a little over 3%, CAT down almost 4%, and Valero down a little over 4%. So this was definitely a month where, again, the gains were concentrated into basically big tech and semiconductor stocks, and other performers that had really done well earlier in the year are starting to fall back a little bit. And we're going to see that even more in my top 4 for 24. Now, if we take a look at the top 4 for 2024 list, we can see that the index is really starting to outperform most of the list now. Valero is the only one of the list that's still outperforming the index, with Caterpillar falling just behind this past month. But as you look at the other two, you can see that they're really being left behind. Visa has definitely not performed the way that I expected this year, at least at this point, and Hershey is now actually negative for the year. And of course, as you all know, I sold Hershey in February, so let's take a quick look at how it's done before and after. Now, beforehand, it trailed the S&P by just a bit, and afterwards, since the end of May, it has really come down and been outpaced by the index by over 13 percentage points. And looking at this list and how it's progressed, it'll be interesting to see where it ends up in December, because this group was performing really well for the first quarter or so of the year, but then big tech and semiconductors have dominated the last quarter, and this list is getting left in the dust. So this has really been an interesting experiment, and I have some thoughts about what it means for these type of lists going forward, but I'm going to save all that until we get a little bit closer to the end and we know how it turns out. All right, so let's take a look ahead to next month and what holdings I think I'm going to add to going forward. In terms of ones I'd like to have higher in terms of weight, in general, I think I'm good, but if there was one I would like to see a little bit heavier, I think it's Meta. Now, in terms of ones I think are the best value right now, believe it or not, I would still say Amazon, because from a price to cash flow perspective, it's at one of its lowest points in a decade. And when you factor in the growth rate, which we talked about earlier, it looks really attractive to me still. But again, I'm going to break all that down of how and what I'm doing in my next video. But anyway, other than Amazon, I would say that Lulu and Meta are the other two stocks in my portfolio that look to be trading at the most attractive levels to me. And in terms of what I expect to be doing over the next month or so, it's really the same as I've had for the last 2 months. Incremental adds to existing positions, continuing to research new opportunities, and doing a better job of documenting how and what I'm monitoring for each of my stocks. So with all the talk about how I'm a day trader and I'm making too many changes, I've been saying that it should slow down, and it seems like it finally has. But that doesn't mean I'm not going to make any more changes, because I could easily see my portfolio going from the 12 holdings I have today to like 10 holdings, maybe even 8 holdings one day. But like always, I'm going to base it on what's happening in my companies, how things are going in their business, and how they align with my overall strategy. So like we do each month, let's actually review my portfolio goal and strategy. My goal is to beat the S&P 500 in total return while creating a growing passive income stream for my family. My strategy to achieve it is I want to attach myself to companies with wide moats that are generating increasing cash flow and rewarding shareholders with dividend growth that outpaces inflation or share buybacks that increase their ownership stake in the business. So if I recap what happened this month, my portfolio was up a solid amount and we were exactly even with the S&P 500, which was just kind of weird. Annual dividends increased for the first time in 5 months as activity on my account has slowed. Now, only one of my top 4 picks for 2024 is still outpacing the market, and the others are starting to lose ground to the big tech and semiconductor-driven rally. So overall, the performance this month was really good, and up to this point, the changes I made in 2024 have worked out pretty well, but obviously, it's still early. So how did you all end up for June? The market rally seemed to be concentrated in a few different areas, so hopefully you saw a lot of green in your portfolio as well. Now, if you want to know why I stopped using price targets and what I'm doing now, go ahead and click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.